Hey traders, Nick Shaheen here, recapping the day and the week ending Friday the 13th of March. Friday the 13th lived up to expectations. It was scary for the bulls. Started out really nasty. It ended less nasty. Scoreboard down 0.8% on the Dow, down 0.6 on the SPX, down 0.5% on the NASDAQ, down 0.36 on the RET, which are the small caps. The whole week, any which way you slice it, it was a win for the bears. Why so? We had an incredible sell-off. We had a hard sell-off with fear, and then it took a couple of days, or at least two failed attempts at rebounds, and finally we rebounded on Thursday, and it was a decent rebound, but nowhere near the sell-off. And then only to give it back with a scary start of the Friday morning, and they eked out a decent close. However, it was scary. So this is the week, S&P you can see, and then the day, if I zoom in on the day, then you can see also how it was kind of ugly. The S&P started and then it rebounded into the close. Apple, this is Apple, that's the best company on the planet, correct? With an event, correct? Right here. That is the event, and hoopla, news coverage, media coverage, Kramer this, Kramer that, and it was red. All right, so it speaks volumes. If Apple can't do it, then why should the market be able to do so? Google as well was strong all week, and then today it kind of got whacked hard. However, the open interest did give us the clue that it was going to, and my target was 547 for the Goog, 547.5, and it closed about 18 cents away from that. All right, so the NASDAQ did not fare any better. What did fare better are these guys. These are the small caps today. Look how hard they sold off. In the morning, they were leading down. They were down like 1.25%, 1.3%, I think, last time I checked. But they then rebounded hard and, in fact, almost closed green. They had the chance to close green right here had the broader market joined the party. But Apple didn't join the party until too late. By that time, the small cap said, you know what, forget it. We're not going to do it. However, going for the weekly results, the small caps, this is them, every candle is 1 week, had a green week. So still not a very fantastic candle, but it is a green week. Whereas you compare it to the S&P, is had now 3 weeks that are red. This one's tiny, but definitely on volume. So this is not happy. And we'll look at ranges in a little bit on the daily. It's easier to see on the daily. The Qs, that's the triple Qs, those are the NASDAQ. 2 straight week of redness and on volume. Okay, it's a little higher volume probably because of the Apple event. All right, so how do we look at ranges a little better than that? We look at them via this. Let's go to SPY. This is a long time 2-year range, that green line right there. We have pierced it in the correction in October. We've poked it here and here, but it has stood the time, and it's important that we stand it again. And so far, it's held twice. It's got threatened twice, 2 days ago and yesterday, and today. Sorry about that. So it's important that we hold. Volume on the red days almost double the green days. That's never good. Yes, it's expiration day, but still, I don't like to see that. The Qs, they're defending this green area right there, and I drew a line here to kind of visually represent it. This is a party hat, I call it. That's NASDAQ 5000. Yay, pop the champagne. And that was a breakout target eyeball level from this pattern. They broke out, and I expected it to do that. And then now what is the question? Will they use prior resistance as new support? Meaning, this area was resistance, they fought it so hard, and they broke out of it. Will it become support now? Sometimes it does. So next week, we'll talk about what could bring it down or up. Let's look at the IWM, which are the small caps. By the way, volume was twice as much today than yesterday. This is a fantastic candle. Look at how big this candle. Let me zoom in. You can't appreciate it. All right, look at the size of this candle. Yesterday's candle was fantastic. They opened at the low, closed at the high. Today they opened at the high, sold it all the way down to 121 and change, and they decided, no, they want to close it closer to the high, which is bullish, the fact that they rejected this tail. They left the tail, but it's still a red day. And we're still so close to the all-time highs. So What's the rest of the market waiting for? How long can the small caps outperform and stay up there waiting for the breakout? Last time it happened here, 2 days of outperformance from the small caps, and look at the rip we got. But that was from a 9 or 10 or 12 or 13% debacle. This is all-time highs. It's going to be harder to replicate this from this level. That's my opinion. All right, so what to do next week? Most traders should sit out next week. What do I mean by that? I mean that next week is going to be a coin flip, meaning we have an event in the middle of the week. That's the Fed. Will they, won't they take out a statement? The markets are looking for one word, patient. If the Fed takes out the word patient, the market believes that there will be a rate hike within 2 months. That's the belief in the market. That's an absolute belief. So if the Fed actually takes it out and says nothing but, then nothing new other than that, then the markets will sell off. Now, they may take it out and they may say something like, hey, we took out patient. However, that doesn't mean we automatically are going to raise rates in 2 months. That was the old thinking. Now, we're still data dependent, and we're going to go day by day and month by month and look at the data. Now, that would initially sell off a little bit, and then, oh, wait a minute, they're saying that it's not necessarily 2 months. Go back to what you're doing. They start buying again, and we'll rebound a little bit. Now, they may leave it in there and not say anything else. Markets will rally. That would be a relief rally because the markets are relieved that something bad did not happen. And those relief rallies are usually shortable cautiously by me. I shorted all relief pops in 2014 successfully. So those I would look to short. Now, there is a scenario that nobody's talking about. What if the Fed says, it's a long shot, but it's a scenario. What if the Fed says, okay, we've seen so many bad retail sales, unemployment this, week this and week that. We're leaving the door open for another QE should we need it. Then we have a huge rally, and that's a rally I'll let run for a little bit. Why? Okay, because the relief pop rallies, the other one, does not change the macro, the assumption, the thesis. The thesis is still the same. Rate hike is coming, whether this month, next month, September, it's still coming. So nothing has changed. Whereas if they say, well, the thesis has been dead QE, rate hike coming sometime soon, recovery on track. You come in and say, okay, we are bringing in QE. That's a new variable brought in, new money, a new catalyst, positive catalyst that wasn't in my thesis. So then I have to step back and reevaluate and see if I can measure the impact and then decide on how I want to trade forward. So for next week, most people should avoid trading the weekly, the monthly expiration, the March 20th expiration. If I wanted to trade, I would trade out weeks and up away from price using credit spreads or debit spreads, whichever your poison is. The best trades on events, this is like an earnings event. If a company is having earnings, I don't trade it. I trade it immediately after the earnings because then I know what they're going to say and how the market's reacted. Those are the best trades. So be cautious. Pick on a few losers. I picked on Priceline this week and I won. I picked on Google this week and I won because they were wounded gazelles. Priceline was a wounded gazelle. So was Apple a little bit. Google, I picked on it because of open interest data. So get knowledge and pick on a few stocks and try to get a few longs if you can. But Priceline was looking to close the gap, so we picked on it and we won big time today. We could have cashed out or reset lower. So avoiding the trade for next week is totally fine. It's going to be tricky waters. Looking into next week, the setup is the same. There's big money expecting huge downfall. For example, if I use the RUT, that's the small caps, people expecting 1130 and big money is expecting 1280. Who's right, who's wrong? Who am I to say? I'll wait until Wednesday and I pick sides. Until then, I let them fight it out and I'll leave my money safe and then I place the trade with knowledge. This is Nick signing out. If you have any questions about any of this, hit me up with a message and I'll get back to you immediately.